what can we expect next month? Another big pump? Another leg up? Well, according to this model, yes. We are projected to hit 45,000 this November. Especially if we get some good news, like that SEC battle versus Ripple. If that concludes, we could definitely get a big pump. If we get a spot Bitcoin ETF approval, definitely get a big bump. Yeah, according to the mid-cycle Fibonacci phases, okay, according to this, if you're looking at all the phases within every cycle, if you look at what Bitcoin has done in the past and what it's currently doing, this projects that Bitcoin will hit $45,000 sometime in November, maybe mid-November, late November. But if we're using history as a guide, this is where we are, right? Going up to the halving event. And then, you know what? Things get really, really explosive. You know, if you discount everything else that's going on in the macro, you know, in a macro perspective or a micro perspective, and you ignore all the volatility of the markets and Fed and everything else, right? If you ignore that and you just look at how Bitcoin's moving this cycle versus last cycles, it's very, very similar. Almost no deviations. So you can make an argument that Bitcoin is just moving according to plan, like it always has. And 45,000 could be in the works from where we are. That's not too unreasonable to think about, 45,000. We're like 34,000, so it's 10,000 bump from here. If we get a spot Bitcoin ETF, we're going to get that 10,000 bump immediately in the same day. Nothing outperforms Bitcoin. So this is year to date. Year to date, S&P 500, NASDAQ versus Bitcoin, up 100%, over 100%. NASDAQ up 30%, S&P up 9% or 10%. I have a feeling this is a little outdated because NASDAQ took a big dump yesterday. So, but my point is this. Bitcoin is definitely the best that we have. Okay, if you want to opt out of our current financial situation and you want to hold on to the best appreciating asset there is, well, look no further than Bitcoin. Flight to quality, flight to safety, flight to gains. Now, we know Bitcoin had a big jump recently, right? Obviously, I think people, you know, this is the thing with crypto. People get used to a certain level really, really quickly. I could tell because right now the live viewers tuning in is way lower than a few days ago when Bitcoin first came above to about $34,000, right? Like people just get used to it so quickly and the enthusiasm just dies off just days afterwards. But I think people forget that just last week, I have to zoom out, just last week, we were all the way down here. We were down here, and now we're up here, and somehow the enthusiasm wore off. That's just not right. That's not right. But, you know, unfortunately, crypto is 24/7, and people stare at their phones all day long, and that's what happens. But, man, we had a tremendous climb up already, but it's not over. Okay, Arthur Hayes, ex-co-founder of BitMEX, he believes this is a trigger, okay, not specifically the indicator, but this is a trigger for Bitcoin. And it's not spot Bitcoin ETF, okay? I know that's been widely said and used already, but he believes it's due to the war, this flight to quality that's been kind of spread around recently. To quote him, if long-term U.S. Treasury bonds offer no safety for investors, then their money will seek out alternatives. Gold, and more importantly, Bitcoin will begin rising on true fears of global wartime inflation. That is true, especially in countries, citizens of the countries that are in the fight, you know, they're limited in terms of what they can access, what they can withdraw, what they can buy, and also they deal with hyperinflation because everything obviously becomes super expensive, right? And it's not just them, it's their neighboring countries and other countries that are affected by what they export. So it all kind of relates, right? And inflation will definitely go higher. And when inflation goes high, you don't want to have a lot of cash. You want to hold assets that outperforms inflation. So war could actually be good for Bitcoin. Not that it's good for the entire world or anyone in general, but this flight to quality, even BlackRock, Larry Fink said that, flight to quality is a real thing. And more people are paying attention to it. And more importantly, in some instances, it's like the only thing that they could flight to. When you're in a decimated area or a country, where do you go all of a sudden get gold from? It's kind of like one of those situations. We are definitely seeing a lot of Bitcoin and crypto leave exchanges right now. This is awesome. While Bitcoin is pumping, I heard from the crowd that Coinbase was starting to get wonky. Their systems always goes down whenever there's a lot of FOMO, because when there's FOMO, there's real FOMO, like millions of people coming in to Coinbase trying to buy. So we're seeing that, and of course, we've been seeing that for a while. It's just that no one really pays attention, but I've been telling you, this is part of the growing fundamentals of Bitcoin, how its exchange reserves keeps on going down. And you can see this goes back about a week, and we see significant amount of Bitcoin being taken off the exchanges, removed consistently, day after day after day after day after day. This will add up. One day when Bitcoin is much larger, it's going to be very difficult to buy because, quite simply, the supply is so low. That's why halving events are so significant, because halving events also cut the inflation rate in half. That means there's less coming out. But we already mined most of the Bitcoins already. So everyone's fighting for what exists now. And what exists now is dropping too, because the big institutions now loading up, retail investors that continue to hold on DCA. So MicroStrategy looking like a genius company, and Michael Saylor looking like a genius company, up 11% right now. MicroStrategy is now up a cool $746 million just with their holdings, over 158,000 Bitcoins. A lot of people picked on Michael for a long time, saying he dollar cost average way too much, way too high. But he proves that it works. It does. And so many of you guys have been doing this too and been DCAing, and you have also proven that this works. That's the power of DCA. You don't have to outsmart the market. You don't have to time bottoms or tops. You just continue to DCA on a schedule, unwavering, like a robot. You take emotions out of it, and then you will be led to the promised land. So Michael Saylor is proving it with his strategy, and I'll prove it with my DCA portfolio too with you guys. It's really that simple, okay? But in a crypto winter, people don't want to believe that. A lot of people don't. A lot of traders will come out and say, well, look at me. I'm so smart. I could time bottoms, and I can make infinite amount of money in a crypto winter. You don't need to be like that. Some people are probably successful doing that, but most are not. Just DCA. That's all you really need to do.